Hey, this is Danielle, and today we're going to be talking about a setup that I like in Microsoft. So, if you know me, you know that I love to trade Microsoft, and Microsoft is, a great stock to trade because of the very nice trend, because it is a stock that is highly in focus, which just means that there's a lot of liquidity. People talk about it, people trade it, AI, strong story, all that good stuff, but it's not as crazy as something like NVIDIA or SMCI. So I like it for that reason. I also like just the regular patterns that the stock has. And one of those patterns is the rally going into earnings. Now, you'll note that Microsoft has already come up and made a new all time high just recently. But what's great about that is it pulled back, it almost hit the 21 EMA, and we're having volume coming into it. And you know what? When it pulled back, it consolidated some more. So whenever you have a stock that just made a new high, it pulls back, it consolidates again on a lower time frame. In this case, it's a 195-minute squeeze. Then you also have volume breaking out. What that does is it gives you another opportunity to trade it to yet another new all-time high. So you can just do this again and again and again until eventually at some point it reverses. But so far, we're just not there yet. If you look at the earnings hot zone, what you'll find is that Microsoft does typically rally going into earnings. These green screens, the first two are the pre-earnings time frame. The third one is post-earnings. The majority of the time, those screens ahead of earnings are going to be green, especially recently. Obviously, during the bear market, patterns shifted. We're trading to the downside, but for the most part, Microsoft trades higher before earnings, and we are within that pre-earnings time frame right now because that report is going to be on the 23rd. So with the stock, I just got into a trade today. I think with my Fibonacci levels, we have a target up at 435 and then up at 440. I like to overlap that with a monthly options chain because that's going to be where you can see that high open interest, and it's also going to be the series just before earnings. When you trade the series just before earnings, it gives you the ability to capture that run into earnings, and you can trade it with a butterfly instead of a long call, which is going to be a lot more expensive for much lower price. So I got into this trade 425, 440, 455 call fly for $3.78. That is targeting that high open interest strike at 440, where I also have my Fibonacci targets. So moral of the story, with this butterfly, I'm getting in right now with the 195-minute squeeze for the run into earnings, and I'm targeting 440. I'll try to get out 75%, 100% of the debit. I don't know, might hold a little bit longer, just depends how it trades. But if it does hold 440, that's also a spot I'll get out. It's also important to note, what if it doesn't work? If it doesn't work, I would consider that breaking down probably below 420. It's probably where I would take a stop, and I'd take like a 50% stop on the trade. So that was my trade on Microsoft. I hope you found it helpful. If you want to learn more about me, my trades, and my butterfly specifically, make sure you check out my YouTube channel. You can find my YouTube channel at Trader Danielle, Danielle. This is my channel right here. So I have this new series right now, Trader View, where I'm going over all of my butterflies, the good, the bad, and the ugly. So make sure you check it out, and I'll see you in the next one.
Hey traders, thanks for watching this video. If you want to make sure that you get all of our free trading content, make sure you hit subscribe, and also give us a like and comment down below. If you want to learn more about us, and if you want to join us for live trading in real markets with real money, make sure you go to simplertrading.com, where you can join us for more info. Thank you very much and have a great day.